Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which is in a very strong uptrend. We can notice this series of impulses and corrections every time the market pushed higher after a correction fueled by strong institutional buying. And we will be speaking about institutional buying in just a few moments when we will move to the commitment of traders analysis to see how institutions have been buying gold aggressively and moving and shifting their orders. But for now, let's keep in mind that on the monthly we are in a very strong uptrend, and let's also keep in mind that all uptrends are composed by a series of impulses and corrections. Now, these impulses and corrections are what create the higher highs and higher lows. Now, if we just got a new higher high, so a new impulse to the upside, at some point the market, if it wants to continue with the uptrend, will need to create a correction so we can get a higher low and new institutional buying, and only then the market can continue higher. So if the uptrend wants to continue as it usually it does, so this is the classic market structure, you would expect first a correction and then the continuation to the upside. So first a higher low and then a higher high, which means that we could expect some potential short-term bearish price action here from a monthly standpoint for that correction to actually take place. So here in the monthly, let's keep in mind that the market could show some short-term bearish price action before continuing higher, and let's drop down on the weekly time frame. Now, from a weekly perspective, what we can see is that the market clearly was in a very strong trend as well. We can notice also that the patterns that the market was creating here on the weekly time frame were the usual patterns that you would expect in a bullish market. So we were seeing higher highs and higher lows, then the consolidation here in the form of a wedge, then we had the breakout, new higher highs and higher lows. However, now what we're starting to see is the market failing in creating new weekly higher highs. So essentially, it seems like the buyers are now losing the control over the market, and there is a possibility for that short-term correction that we have previously identified when we were looking at the monthly time frame. So also here on the weekly, it seems like the buy side of the market is losing its bullish momentum, and a potential reversal for the short-term monthly correction could be underway. Dropping down on the daily time frame, what do we see? Now here on the daily, I spoke about gold just a few days ago. I spoke about it when we were seeing this push to the downside and explained all the reasons for which all this level was strong support, and I was expecting a rejection away from the zone, and that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into what we have from a technical perspective, first let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders. Now, if we look at the data for gold, we have to keep in mind that we are already looking at gold against the USD, because all currencies and commodities on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from 161k to 200k net positions. However, now with the last report, for the first time, we start to see net positions getting decreased once more. So in the short term, we're starting to see institutions leaning back towards the bearish side for the market. So they expect that correction as well, with net positions going from 200K to 195K. So we see 1,100 shorts added just with the last report and 4,500 longs getting closed. That combined with the fact that the market is clearly losing steam, as we have already seen on the monthly and weekly time frame, and starting to shift back to the bearish side, makes it possible that if from a structure perspective we see a break of structure, and we will now speak about that, this net position number could continue to decrease, meaning that institutions could continue to short, potentially creating that monthly correction that we have previously identified. But what kind of break of structure we need to see? Well, this level here is currently the one holding as support. Until the market will remain above this level, it can easily continue higher, because keep in mind that in the long run, we still have 256,000 longs compared to only 61,000 shorts from an institutional perspective. And this correction would just be, in the grand scheme of the monthly trend, just a short-term correction. But if the market here manages to break below the support, at that point, that previous support would become resistance. So after the break on the retest, there is good probability of seeing more institutional shorting, further increasing the probabilities of that potential move lower that we have identified at the beginning of the video. So if the market will break below the support, at that point, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. So if the market would break and retest this level, and the market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside away from this area for the market to create that correction on the monthly time frame. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.